This conference will now be recorded.
Right.
Yes, sir, your voice is audible. Yeah.
Very good. Welcome all of you all. Before I start, there are certain rules. Rule number 1, no one is going to use the mic. Can you tell me why? As you're all aware that there is recording going on. So there will be echo when two voices clash. Point number 2, अगर आवाज धीरे आ रही है आपको, if my voice is low and other people are able to hear it properly, then please log off and log back again after a minute. The problem is from your side. Is this clear? Point number 3, if you are asking a question, you will have to put on the chat window. Can everybody see the chat window? So you have to write on the chat window. Point number 4, in my class, the entry time is 4 o'clock. There is no exit time. So please don't come by the clock in my class. Don't be in a hurry to leave it. So today is the first class. I will let you go early, but from tomorrow, there is no exit. So please don't come from the clock as a professional to attend my class. Okay? There is no exit time. Point number 5, homework will be given to you all. And those people who don't do homework don't get entry into my class the next day. So I am the old school of teaching. So probably whether you like it or don't like it, this is the way we function. So any question you will type on the chat box. If I believe I'm going to answer it later on, I might not answer your question. So if after 5-10 minutes I have not answered, please write back your question. Are we clear with your rules? Welcome. I am Chetan Panchamia. I'm going to get, rules should be in your mind, not in the piece of paper. Anand sir, don't worry. If you don't remember it right now, you will remember it very soon. I'm going to be your friend and your guide for this session of options. I'm going to learn a lot of things from you all, and I'm going to share what little I know. So before I start, anyone wants to say anything? No one? Welcome all of you all, and we will start with something positive. Your life is your choice.
One time, I was flying from.
If you cannot hear the voice clear, just see the reading.
Ukraine. I boarded the flight, and the stewardess came up to me and said, "Welcome on board, sir. We guarantee takeoff." I asked her, "Landing, madam?" She said to me, "You're a monk, aren't you? Pray to the Lord Almighty for a safe landing." We all are aware that when we take a flight, the takeoff is completely beyond us. We can do nothing about the takeoff. It's completely in the hands of the pilot. And when it comes to landing, even the landing is completely beyond our control. It's in the hands of the pilot. Many times when I fly and there is a very smooth landing where we don't even come to know that the plane has landed, people give an ovation, a loud round of applause. I have not been an exception either. Of course, the only thing is we don't give a standing ovation because the seatbelt sign is still on. Yes, ladies and gentlemen, the landing is also beyond our control. And what about the turbulence? The turbulence during the journey, during the flight, is also completely beyond us. The wind speed is beyond us. When the plane passes through the clouds and the entire plane becomes wobbly, it's not in our control. What is in our control during the flight is our choice. Some people choose to just go to sleep, yet others get completely drunk on alcohol. Some watch movies, some keep munching something, yet others make new friends, talk to others, and network. Yes, what to do during that journey is in our control. In the journey of life as well, the takeoff, which is our birth, is completely beyond our control. We didn't choose our parents. We didn't choose which nation we were born in. We didn't choose which city we were born in. We didn't choose our socio-economic class we were born in. We didn't choose our looks. We didn't choose the religion we were born in. Our takeoff in the journey of life was completely beyond us. And the landing, death, even that can situations which are beyond us. It's caused by people who are beyond us. Yes, ladies and gentlemen, in this journey of life, the takeoff, the landing, and the turbulence is not in our control. What is in our control is the choices we can make. And therefore, spirituality is about learning how to make those right choices. When we learn to make those right choices, we learn to live a transformed, happy, fulfilled life despite all the turbulence and problems that are going on around us. It is said, when we are beautiful, it's God's gift to us. When we live our life beautiful, it is our gift to God. Therefore, being a male is a matter of birth. Being a man is a matter of age. Being a gentleman is a matter of choice. And as a corollary to that, being a female is a matter of birth. Being a woman is a matter of age. Being a gentlewoman is a matter of choice. Let us all take to spiritual wisdom, learn to make the right choices which are within our control as our gift to God, and thus live our lives as thorough and perfect, ladies and gentlemen. Thank you.
Welcome, my friends. What is very important is the power of choice. This video is very pertinent to life as well as markets. In markets, whenever you make a trade, The profits are not in your hands. Like you take a plane, the landing is not in your hands. You take off. When you take a trade, only the losses are in your hands. The landing is not there. Similarly, profits, if we survive for long, we are going to make. But we cannot just dream about profits. We got to accept losses as well as profits as a part of the game. On that note, let us start. Welcome all of y'all. Suresh Bhai, how are you, sir? Where are you from? Are you married? Sudeep Bhai, Ashutosh sir, are you married? They say a man gets complete wisdom only when he's married. Sudeep Bhai, where are you from, sir? सुरेश भाई कलकत्ता मेरे साथी है. Sudeep sir, so my friend Sudeep sir is married, and you know Sudeep sir has woken up at 6 o'clock in the morning. Sudeep sir asks his wife, what happened? He says, get up, your in-laws are going to come. Please get tomato. I want to make tomato soup. Sudeep sir realizes his mother-in-law likes tomato soup. So this is the advantage of getting married. You don't need an alarm clock. 6 o'clock, got up. Why? In-laws are coming. So he has to get tomatoes. But they're coming in the night. So this is what I'm trying to tell you. They're coming in the night. But Sudeep Bhai has got up early in the morning. This is the beauty of life, beauty of getting married. You start doing things like Kabir said, Kaal kare so aaj kar, aaj kare so ab, pralay aayegi to karega tab. So this is when you get married, you do things a lot quicker. On a lighter note, so Sudeep sir goes early in the morning to go and buy tomatoes. So Sudeep sir, can I know the price of tomatoes in Lucknow? Sudeep sir, 6 o'clock. Have you ever purchased tomatoes in Lucknow? 30 rupees a kilo. I think so. You got the price wrong. Tomatoes are around 35 to 40. Okay, let us give you the benefit of doubt. So Sudeep sir goes. He says, I'm ready to buy tomatoes, 20 kilos tomatoes at 25 rupees a kilo. The tomato vendor, he comes at 7 o'clock and he says, sir, my tomatoes are very fresh. I can give you 20 kilos at 35 rupees a kilo. 35 rupees a kilo. Can you see this? Is the deal done? Vikas sir, Vikesh sir, is the deal done? No. Why? Sudeep sir is only giving 25 rupees. Vendor is asking for 35 rupees. Quantity is the same, but the price is different. Right? So now Sudeep sir realizes if I don't go with tomatoes, I will not get entry into the house. So he increases the price to 30 rupees. Tomato vendor says, no sir, I cannot give you anything less than 35. Then Sudeep sir requests profusely. He says, please give me for 32. I'm ready to buy 30 kilos at 32 rupees. So the vendor agrees. He says, okay, I'm ready to give you at 32 kilos, 32 rupees, 30 kilos. Is the deal done here now? So what is the bid price? The price at which Sudeep C is ready to purchase. Buyer's price. Bid quantity is what, Jatin sir? Buyer's quantity. Yes, Bhavin bhai, where are you from? What is the ask price? The tomato vendors, seller's price. And what is the ask quantity? Seller's quantity. So this is called order matching system. So when the buyer's price and the seller's price are matched, when the buyer's price and the seller's price are matched, so what does it do? Sudeep sir pays 32 into 30, 960 rupees. And the vendor gives 30 quantity, 30 kilos of tomato to Sudeep ji. Right? So this is what is called marketplace. Kya kare? Dash by Sudeep ji, in order to save 3 rupees, increased the quantity from 20 to 30. So when you demand more, the seller is bound to reduce the price. Is this making sense? All of you all? How many of you have traded in the markets? How many of you have seen this big quantity, big price,
Yes.
ask quantity, ask price? Great, great. So this is called the order matching system. Very good, Vikesh bhai. We will learn everything. Try to learn that. Okay. Good, Chirag bhai. Where are you from, Chirag bhai? So welcome. Introduction to technical analysis. Truth be told, I'm not a technical teacher. So I might not be able to teach you that well as your expectations are. But at the same time, I promise you, I will try to give my 200%. Okay? So what is technical analysis? Before I do that, what are markets? This is what we did right now. What are the basics? What is technical? Assumption, candlesticks, candlestick patterns, price patterns, and discussion of live trades. We try if we have time today. Right? Good. So, greatness cannot be achieved by thinking about money. It comes from thinking about processes and helping others grow and thinking as a team. Okay? So greatness does not come by thinking about processes. It comes from helping others grow and thinking as a team. When writing the story of your life, don't let anybody else hold the pen. Harley Davidson. Do you know who this guy is? Harley Davidson. Anyone? Wow, Ramakrishna sir. The bike, Harley Davidson bike. Anyone has it here? We still, after so many years, it's still the pioneer bike. Right? So what is the market? A market is a medium that allows the buyers and sellers of specific goods and services to interact. Like Sudeep sir went and purchased tomato vendor in order to facilitate an exchange. This type of markets might either be a physical marketplace where people come together, like Sudeep ji went, or a virtual marketplace where the buyers interact with the seller as in an online market. Right? Market establishes the rate of goods and services. Market establishes the rate for goods and services. You saw this, the price of tomato, 32.5. So when the buyers and sellers interact, what happens? The fair price of goods and services is determined. When demand is more than supply, prices go up. When supply is more than demand, prices fall. Are we clear with this? Good. Good. Sukhbir sir, you have purchased Reliance shares at 1650 last year, month of June. And currently Reliance is at 2000. Currently Reliance is at 2000. Sukhbir sir, are you winning or losing? Are you winning or losing? You are winning. So who determines whether you are winning or losing? The market forces decide the current price. Abhishek sir had sold Reliance last year at 1690. Current price is 2000. Who decides? Who is winning? Is Abhishek sir winning or losing? Very good, Ankit sir. So the market price decides. So when Abhishek sir sold, he felt that Reliance is going to fall. That is why he sold. Sukhbir sir bought. He felt that Reliance is going to go up. That is why he bought. So at a given point of time, the buyers and the sellers both feel that they are correct. But it is only that the market decides who is going to be a winner. Either the buyer or the seller, any one is going to be the winner. Both cannot be the winners. Am I clear? Good. Yeah, if you book profits, you're already a winner, right? Now, in a trading day, there are 4 important points. If you remember, the tomato vendor did the first deal of the day at 32.5, right? First deal of the day. Chirag bhai, are you aware that this is an English class? Did someone tell you? Gujarati show, Gujarati show. Okay, so the high price is the price after which the market falls. From there is a resistance. So he sells at 35, right? After that, his quality of tomatoes go bad and the price is falling. It comes down. He sells at 33, then sells at 31, and the last price is 30, which is the low price. It is also called the support. Why is it called the support? क्यों low price को support बोला जाता है? Why? Anyone? No, because sellers are not able to bring it down. Buyers come and support it. Here the buyers were not able to pull it up. Seller comes and brings it down. So market is nothing but the fight between the buyers and the sellers. And he sells his last quantity at 31 and goes home. So can you see the 4 points? Opening is the first price or the first trade of the day. High is the highest point from where there is resistance. Market falls. Low is the lowest point from where there is support. and the close is the last traded price. If Sukhveer sir had waited for the closing price, would Sukhveer sir get a lower price? Yes or no? Yes or no? Yes. So it is said when the close is lesser than open, the seller has won the day. So most important points are your closing points. If the close is greater than open, it means that the buyer has won the day. Am I making sense? If close is greater than the open, it means the buyer has won the day. If close is less than the open, it means that the seller has won the day. Is this clear? Good. The opening is the first trade of the day. The high is the highest point where the stock has traded. The low is the lowest point. The close is the last traded point between the buyers and the sellers. So these are your 4 points which are going to be your friend as we get into this journey of technical analysis. Sir, not possible, Chirag bhai. Hindi mein nahi kar payenge. Why? Because in the south there are a lot of people who are from south. They don't understand Hindi. What I will do is I will let Agnish connect with you after the class, because Hindi we cannot do it. Okay, sir? So I'll let Agnish connect with you. I know a lot of people don't know Hindi, sir. What is technical analysis? Technical analysis is the study of past prices, other indicators like volume, open interest, market breadth to determine buying and selling pressure. So what are we trying to find? Whether the prices are going to go up or the prices are going to go down, right? We're trying to find that. Okay, how do I be finding it? Price action, past prices, right? Volume, open interest, market breadth to determine the buying and selling pressure. So we are using technical analysis as a tool with the help of past prices and other indicators like volume, open interest, and market breadth. What are the assumptions of technical analysis? Like any theory, my friends, how many of you have done technical analysis? How many? I have been told that 45 people have already done technicals. Right? So probably I learned a lot of new things from you all. You all are much better than me. So let me first share my little knowledge I have. So basically, technical analyst is not bothered whether the stock is overvalued or undervalued. He is not bothered. In fact, what only matters to him is what is the future movement of the security. Is the price moving ahead with momentum and with volume? If it is moving ahead, it will go forward. So how many of you have gone to a beach? If you've been to a beach, if you see the waves, when you're standing in the night, what do you see? The wave rises by 10 feet, falls by 5 feet, again rises by 10 feet, falls by 10 feet, 5 feet. So the rise is more than the fall. This in technical analysis is called an uptrend. So if the market is moving up with strong price and volume data, falling less with low volumes, the momentum is on the upside. Similarly, in the morning, the waves are moving away from you. It is falling more, rising less, falling more, rising less. So that is called a downtrend. And the third one is a range where the market oscillates between 2 points. Market oscillates between 2 points. Right? So these are your three price action patterns: uptrend, downtrend, and a range. Am I clear with this? The first assumption, market discounts everything. Anyone who is a director of a company, Subramaniam sir, are you a director in a company? Okay, anyone, Champada, are you a director in a company? Okay, Dutch sir, you are a director, which company? Okay, so let us assume that Daksha's brother is a director of Reliance Industries. Okay, he's a director of Reliance Industries. Now, his brother comes home for dinner, and Daksha overhears him talking that other director is telling Daksha's brother that his Mukesh Bhai is going to declare bonus in Reliance Industries. So what happens, my friends, if someone declares a bonus? What happens? What happens? Prices go up, very good. So whenever the company declares a bonus share, they are doing well. Company is in good profits, right? Prices go up. So next day, Daksha goes to the broker and buys 1,000 shares of Reliance. Daksha's broker is surprised. He said, what happened? Why are you buying? Daksha does not answer. Broker immediately understands there is something, because Daksha had never bought more than 100 Reliance. So broker himself buys 5,000 shares. Others are also buying. He makes his other clients go buy Reliance Industries. The other clients tell their friends and relatives, and they all keep buying. Right? The assumption tells us that all known and unknown information in the public domain. What happened? Only Daksha knew from his brother that Reliance Industries is going to announce bonus shares. But as he goes into the market, goes and tells the broker understands. Broker makes his other clients go buy. The clients tell their friends and relatives. Right? For example, if there is an insider in the company who could be buying the shares in a large quantity in anticipation of a good announcement of earnings, even though he is buying secretively, the price reacts to his action and it gives a clue to a technical analyst that this could be a very good buy. This could be a very good buy. Am I making sense? So the price action, you will see strength because someone is buying. So the markets discount everything, leaving the acts of God. What are the acts of God? Earthquake, tsunami, which comes without any information. Other than everything else, market keeps discounting it. Point number 2. How is more important than the why? How is more important than a why? Siddharth sir, there is a news that Rakesh Jhunjhunwala buys Praj Industries at 100 rupees. What will you do? There is a news that Rakesh Jhunjhunwala has bought Praj Industries at 100 rupees. What will you do? Good. So most of you said buy, buy, buy. Now, sir, there is a principle in technical analysis which says that you are not going to buy. Even if God comes and says you buy, you will note down this price. If after a few days price is above 100 rupees, you know it is bullish. If after a few days it starts trading below 100 or it stays below 100, then the market has discounted this news as useless. So this 100 becomes your referral point. So it's very important. If Rakesh Jhunjhunwala has bought at 100, what is the price action telling you? Is it above 100 or is it below 100? So whatever the price action tells you, that is more important. It is not important if that Rakesh Jhunjhunwala has bought. Why has he bought? That is not important. How is the price reacting after this news has come out is more important. Am I clear? If it is trading above 100, that means the market has taken it positively. If it is taken below 100, market has rejected Rakesh Jhunjhunwala's price. Point number 3, the price moves in trend. So if I go here and take you down to investing.com, if you see here, let me take you to the monthly chart. Can you see the price? Not necessary Nitin Bhai. It can go up and fall. There has been a lot of times that Rakesh Bhai has bought a stock and it has fallen. Please check. Can you see this? It was in an uptrend, again in a downtrend, and now again it is moving up. So they say that in technical language there is a saying that the trend is your friend and the market moves in the trend and the trend does not change overnight. So if you are able to catch the trend, half your job is done. If you are able to catch the trend, half your job is done. So once the trend is established, you know that the price will move in that direction until and unless you don't see a trend change. Point number 4, history tends to rhyme itself. Is this making sense? The trend is your friend, and until the trend does not change, you should play in the direction of the trend. So this is the most important thumb rule. A lot of people anticipate or try to anticipate this trend change. So Nitin sir, next time if you hear somebody buying something, check the price at which he has bought. Is the market trading above the price or below the price? right? Good. Last point. History tends to rhyme itself. In technical analyst concept, the price tends to repeat itself. So what are the human psychology? What are the human emotions associated with money? Shadad sir. So Ramakrishna sir, if your neighbor is making money from the stock market, अगर आपके पड़ोसी शेयर बाजार से पैसा बना रहे हैं, then what will you do? You'd also want to make money. So you become greedy when your neighbor makes money, right? When you start losing money, what happens? When you start losing money, what happens? Your greed turns into hope. Does it change into fear immediately? Champakda? No. You become hopeful that your loss will turn into profits. Only after a long time, when the market keeps falling, only after a long time when the market keeps falling, that your greed turns to hope, turns to fear. So human psychology have been embroiled in this greed and fear cycle. So near the top people have greed. So when people become greedy, market is forming a top. It might take months to years. It does not happen immediately. And when market becomes fearful, at the bottom, people sell at the maximum loss. So this top and bottom are associated with greed and fear. Am I making sense? So my friends, we've all made a mistake of buying near the top and selling near the bottom. Most of us have done that. So the whole purpose of learning today is to understand that we don't make the same mistakes every day. Right? Good. Good. So are we clear with these 4 rules? Can I repeat those rules for you all? Markets discount everything. The how is more important than the why. Price moves in trend. History tends to rhyme itself. Are we all clear? What are candlesticks? Good, Puneet bhai, where are you from? Yes, Puneet bhai, where are you from? Ankit bhai, kahan se ho aap? Puneet bhai, Mathura se ho, lovely. Wow, you're from Uttarakhand. Lovely, Ankit bhai. Great, Pramod bhai. What are candlesticks? Very good, Sudhanshu sir, very good. Warren Buffett saying. Candlesticks, a financial style of charting, which tells you what can be the future movement based on certain patterns. Now, these charts can be of daily, monthly, weekly, or intraday time frame. Any time frame, it can be a 1-minute chart, it can be a daily chart, weekly chart, or monthly chart. Anyone, right? It's a style of financial charting. Now, my friends, candlesticks was used by the Japanese rice traders in the 1500s. So there is a saying in technicals, any pattern which has a certain degree of predictability, that means it has a predictive value and is repetitive in nature, and it is repeated time and again. We can use this for future prediction. Am I clear? So let us do, what are the four types? What are the types of candlesticks? Now if I see here, a candle body consists of three parts. Real body. The first and the most important part is the real body. If the difference between the close minus open is positive, that means if the close is greater than open, right? The real body is colored in white or blue or green. So real body is nothing but the difference between the close and the open. White, blue, green. Right? White, blue, green. Upper shadow and lower shadows, what are they? Difference between the high and the close and the open and the low is called upper shadow in a bullish candle. So when the close is greater than open, it is called bullish. The real body is colored in white, blue or green. When the open is greater than the close, right? When the open is greater than the close, the candle body is black. The candle body is black or red, and it is called a bearish candle. Are we all on the same page? When the close is greater than the open, the body, real body, is white, blue or green. When the open is greater than the close, it is a bearish candlestick and is colored in black or red. So this is called the real body. What is the upper shadow? The distance between the high and the open in a bearish candlesticks. Price rejection from the highs is called upper shadow. भाव ऊपर जा रहा है और गिर जा रहा है, price rejection. Price rejection from the highs is called the upper shadow. Can you see this? Price rejection from the high. Difference between the high and the close. Right? What is the lower shadow? Price goes down but reverses back. Difference between the open and the low is called the lower shadow in bullish candlestick. Distance between the low and the close, or the difference between the low and the close, is called the lower shadow. Am I making sense? Great. Great. So what are bullish candlesticks? So when the close is greater than the open, it is called bullish. When the close is lower than the open, it is bearish. Upper shadow is the vertical line between the high and the close bullish, high and the open bearish. Real body is the distance between open and close. Lower shadow, low and the open bullish, low and the close bearish. What is the candlestick pattern? One or more candlesticks, which helps you about the reversal or the continuation pattern, is called candlestick pattern. Okay. Now let us come down to the first one, Marubozu. Marubozu. When the market opens at the low, which is called open equals to low, and there is continuous buying from the opening, and it closes at the high. Only real body, no shadows. They are called actionable candles. Can you see the action of the buyers? They are called actionable candles. Similarly, the market opens at the high, continuous selling, and it closes at the low. Actionable candle. Actionable candle. Right? This is called a Marubozu. Am I making sense? So there is no real shadow, only real body. Shehzad sir, have you ever seen a Marubozu in a real chart? This is a white Marubozu. This is a black Marubozu. So Shehzad sir is going to teach me Marubozu. So my friend, this is the daily chart of Bank Nifty. Now, can you see these candles? These are all Marubozu candles. So please understand, my friends, in real life, you are not going to get a complete Marubozu every time. So even if 85% of the body is the real body, if open minus close or close minus open, that is the real body, is 85% of the total body, I will still consider this as a Marubozu. What will I do? I will still consider this as a Marubozu. Right? So I will still consider this as a Marubozu. Now, my friends, how am I going to play the Marubozu? How am I going to play the Marubozu? Can you tell me? Anyone? Is he trading the Marubozu? Point number one. Define a cluster of a narrow range of 4 to 5 days where the highs and the lows are close to each other. What is a cluster? Small range. So let us define it. Can I see this? Can I see this? 1, 2, 3, 4. Can I see this? Bank Nifty. Can I define this? Can you see this small range? 34,500 compared to the markets. Now, my friends, if tomorrow morning there is a breakout, can I consider this as a Marubozu? So number one, actually speaking, this is a Marubozu. And if you see here, Bank Nifty technically has broken out. 35,380, 35,490. So if you see Bank Nifty has broken 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days range. And if I see this in the hourly chart, it is inverted head and shoulder pattern. So I will teach you this pattern. Which can give a very big rise. But before that, today it has broken out of this range of 35,400. Though it has not sustained above this on a closing basis. But yes, it has come out and traded above it. A very big level, it has broken out. Right? Now, but this is not a small range or a cluster. So what is a cluster, my friends? Can you see this? This is a cluster. 4 days of consolidation. I'll just show you. Small range. Can you see these small range? Candles are close to each other. This is a breakout of this range. Can you all see it? Now, Ankit Bhai, where will you buy this? Will you wait for Marubozu to get completed? No. So you will identify, once you identify, you will identify the range low and high. When the price breaks either range, high or low, you will enter. If it sustains range high or low for 15 minutes. So what are you doing? You are not waiting for a Marubozu completion. You are entering as it breaks this range. If you see this range 31,510, so you are entering, say at 31,550. So it has sustained this 31,510 for 15 minutes. You are entering, say after 15 minutes. So at the end of the day, what will you do? At the end of the closing, say at 325, you will review if it is a Marubozu or not. If Marubozu, you will hold the trade. If not, you will exit. Am I making sense? So what are you doing? You are entering in intraday. Now, at the end of the day, you are seeing, okay, now it looks like a Marubozu. So I will hold this trade. And then for the next 3 to 4 days, you can hold. Am I making sense? So why are we doing intraday? Can anyone tell me why are we not waiting till the close? Why are we not waiting till the close? And why are we entering in intraday? Can you tell me? Who can tell me why are we doing this intraday? Okay. Let's see. Let's see this. This is a cluster. Yes, is this a cluster? I have sold here. Now what might happen on the same day? It can go down by 200, 300 points. And I will not be able, I will not get a chance to enter. My reward will be very poor compared to my risk. So let me show you this trade. Perfect trade. Can you see this? This was a breakout. If I had waited till the close, my entry would have been 600 points away. My risk would have been 1,000 points. So if I waited for such long, my risk reward will be out of favor. So when I am entering into a narrow range, see, please understand, after a narrow range, there is a breakout. And Marubozu is a breakout or an actionable candle. It works well after the market is in a narrow range. You can get the beginning of the trend. So here, what did we get? Beginning of the trend. Similarly, today also, if you see Bank Nifty, I feel a new trend is starting. Bullishness. New trend is starting, where the markets can go up and make a new high to 37,000. If you see very carefully, this is the start of a new trend. And if I see, I can classify this as a narrow range. This is definitely a narrow range. So for me, you are still absolutely, Nitin sir, if it sustains for 15 to 30 minutes and that high is taken out after the breakout, you should buy. So here, if I take this example, this is my breakout point. Can you see this line? This was a line which was a breakout. So it sustains above this, I will buy here at 35,270. So I'm still holding the trade if I were in Bank Nifty till it does not go and breach 34,950. Bank Nifty can go up by 1,000 points. Am I making sense? So this was a classical, this was the first breakout. Breakout, retest, and now we are moving into the next level breakout in Bank Nifty. So Bank Nifty looks very bullish. Abhishek sir, don't know much about ROC. Right? Is this clear? Are we all clear with the rules? How do I trade the Marubozu? Good. So let us take another example of Nifty. Or let us take Tata Steel. Wow. Can you see this? Can you see this lovely cluster breakout today? Lovely. So according to me now, Tata Steel was a clear buy in the morning. Here, 11,154. Clear buy. And my stop loss is clear, 11,130. Still some distance to go. If it is a right Marubozu breakout, Tata Steel will give you money. Tata Steel is going to give you money. Am I making sense? Wow, so today you guys are lucky. You are seeing a lot of Marubozu breakout. So market is going to go up. Enjoy the party. On a Friday, when you get a range breakout, it generally continues the next week. So learn this principle. On Friday, when you get a range breakout, it continues for the next week. Right? Good. So I hope you guys are clear with Marubozu. Any questions? So, sir, whenever you are trading a breakout, always remember the range low will be the stop loss. Okay? So when you are entering here, now this becomes your stop loss because this is the base of the breakout. Below this level will be your stop loss. So whenever it's a breakout, the range low will be your stop loss. Rohit sir, when you take a narrow range, you eliminate false breakouts. When you take a narrow range or a cluster, you are eliminating false breakouts. So that is why these rules are formed after a lot of deliberation. So let us repeat this principle. Define a narrow range. So what is a narrow range? Small cluster of 3 to 4 candles near to each other. Okay. Identify the range low and high. In the intraday, when it breaks the range high for 15 minutes and it breaks the high, buy it. Keep the stop loss near the range breakout level, range low. Okay. Similarly for the sell side, when the range low breakdown, sell. Identify those levels. When it sustains there for 15 minutes, enter. So Ashutosh sir, if you see Tata Steel, what are you seeing the chart? Can you see this Tata Steel chart? The open and the low are the same. So during a breakout day, the low and the open should be near to each other, and then the breakout should take place. During a breakdown, the high and the open should be near to each other, and then the breakdown should take place. Is this making sense? Is this making sense? Great. So welcome to the jungle. We have completed the first pattern. Marubozu. How are you liking this? Now we come down to the next pattern, which is the hammer. So I think so you guys can teach me on Marubozu, because you guys are champion. You have already done this. I'm just revising it. Right? Monjit sir. Yes. Have you done this? Aman sir, check with your broker. Your profits will come after T+1. It does not come the same day. So when you make a profit, it comes after 1 day. What is a hammer pattern? So hammer is a bullish reversal pattern. What is a bullish reversal? Markets are falling down. Small correction or a big correction. Market opens. There is a sharp fall. From there, there is a rise. Where it comes near the opening price, it can either open a little higher. Sorry, it can either close a little higher than the open, or close a little lower than the open. If the close is higher than the open, it is called a bullish hammer. It shows that there is a potential to reverse. There has been strong buying in the lower end of the range. When the open is greater than the close, it is called the bearish hammer. The bearish hammer, my friends, is also bullish, but not as bullish as the bullish hammer. Right? Not as bullish as the bullish hammer. Am I making sense? Is this clear? Good. So Shehzad sir, how are you trading The hammer. How are you trading the hammer? So let's revise the definition. Abhinay sir, long lower shadow, small real body. So this lower shadow is twice, 2 times the real body. Little or no upper shadow. Long lower shadow, which is twice than that of the real body. Little or no upper shadow. Little or no upper shadow. Right? That is called the hammer. Now, how are you going to trade the hammer? How do you trade it? Abhinay sir, how do you trade it? Vikesh sir is saying wait for confirmation. Next day what? Buy above the body. Lovely Abhishek sir. So Abhishek sir, it seems like you've done technicals. Okay, my friends, please understand, when you see a hammer pattern, it means that there can be two formations. Either this sell trend is getting over, sell trend is completing. Either the sell trend is completing, market can go up, or market can form a range. So there are two probabilities. Either the sell trend is getting completed and the market can go up, or market is forming a range. Am I making sense? So whenever you see a hammer, it does not mean that market is going to go up. It means there is a possibility of this current trend getting over. The markets can either go up or can stay in the range. Now, my friends, there are two ways of trading this candle, hammer pattern candlestick. One is mark the range high, buy on breakout. This is taught in the textbook. Buy on breakout. How many of you know this? So when the hammer high is breached, you buy. Right? Champak sir, this is for all breakouts, all time frame. When the hammer high is broken, you buy. The next one is, please see this carefully, 3 principle rule. What are the 3 principles? Number 1, breakout. Number 2, retest. It comes down. Number 3, reconfirmation. So what are the rules? 1 is breakout of the high. Number 2, small pullback. Up to previous breakout level. Point number 3, reconfirmation. That means the buyer is coming and buying for the second time. So the buyer bought here once, again from point 2 to point 3. Buyer is coming and buying. Reconfirmation of the continual trend. Am I making sense? Right? Am I making sense? So let's see the examples, live examples. So let us go down to State Bank of India. Anybody owing State Bank in the portfolio? Good. Now let's see this chart. Can you see this? Small correction. Small correction. Hammer pattern. Long upper shadow, small real body. Right? This is a hammer. Breakout, retest, reconfirmation. So what have you seen? There was buying. Again, the market came and retested the high. Did not sustain below it and again started trading above it. So this is the two ways you can play hammer. One is breakout. Other one is breakout, retest, reconfirmation. 1, 2, 3. Right? Now can you see this? It will also work in intraday. So second confirmation is Vikesh sir, in life, the seller will always come back to sell. The seller will always come back to sell. It is not as simple that if there is a hammer pattern, that the market will reverse immediately. There will be some sort of a fight. It can be anything. Vikesh sir, it can be a small correction. It can just be a small intraday correction from the highs. It doesn't necessarily have to retest the lows or the highs. Small correction. That means some selling is witnessed in the market. Some selling is witnessed in the market. So let us have a look. Other hammer pattern. Can you show me where is the hammer? Can you see here? Can you show me where is the hammer? Stop me when you see a hammer. Can I say this is a hammer? Yes. Can you see this breakout? The same day after the breakout, what has happened? It has given a retest and again the breakout. So there will be times when there will be some sort of selling when the breakout takes place. Why? Because at that level, the sellers who are selling here, they are still active. So when the trend change takes place, it is not going to be that easy. There will be some sort of fight between the buyers and the sellers. Right? This was a very easy hammer pattern. If you see here, straight buying, no stopping. If you see here, there was a straight buying and there was no stopping.
Right.
Is this making sense? So did you understand the two rules of hammer? Rule number 1, breakout of the hammer high. Rule number 2, wait for the breakout. Look for a small pullback. Now what are the two advantages? The first thing, when I buy a breakout, my stop loss will be big. But when I'm waiting for a pullback, if this is a hammer, and then I'm buying on this breakout, my stop loss will be small, range low. My stop loss will be range low. Am I making sense? So risk will be smaller in point 2. Here the risk will be smaller. So Nitin sir, there are two things. If the hammer high is breached, technically it's a breakout. If a hammer high is breached, technically it's a breakout. Marubozu is an actionable candle. It is not a reversal candle, my friend. So Marubozu, I cannot wait. I will miss the bus. In a breakout, I have to enter as early as possible. Very good. Saptarishi sir, where are you from? Wow, Shillong. Wow. Nice, nice place. Am I clear with the hammer now? Can you see this? Big sell-off. High breached. Pull back. Again breakout. So I bought on this high. This is my stop loss. This is the high. Can you see that, Nitin sir? When the hammer breaks, this is called the breakout. When this high is breached, it is called the breakout. When it comes down, it is called the retest. So this is 1. This is 2. And when this original high is breached, this is 3. So this is the breakout level, the high of the hammer. The pullback is 2. Retest, it is coming towards the high. 3 is reconfirmation. So Nitin sir, hope I have passed your exam. Are we clear till here? You need a breakout, sir. Without a strong breakout, you cannot confirm. Point number 3, bullish engulfing pattern. So again, bullish engulfing. Okay. So it is 5:23. Before I start this, and take you to the world of candlesticks, I want you all to take a 10 minutes break. Have your cup of tea. Sit with your cup of tea. Keep a fresh face and a mind. Come back. Let us enjoy this journey. And let us enjoy our learnings. So it's 5:23. Please be back by 5:33. 5:33. See you exactly at 5:33. Welcome back, my friends. I hope you guys have a good break. Are you all back? Good. Good, Rakesh sir. Good. Welcome. Right. So now we're going to come down to bullish engulfing. So are you all set? Rohit bhai, are you back? So Anand sir has not understood what is hammer. Please see this. Hammer is a pattern where there is a small real body. So where will you enter? When this high, can you see this high? 431. What is this high? Let me check. 259. So when this high gets breached, that is one area of entering. Okay. Now there are two principles. One is just a normal breakout of this high. Other one is market goes up, comes back down. And again, when it breaches the original high, I will buy on this breakout with this as my stop loss. So in this scenario, what did you notice? There was no pullback. So every method has its own advantage and disadvantage. In this method, the pullback did not happen. So if the pullback does not happen, your entry will not happen. Right? Sometimes what happens, the market gives a hammer pattern. Can you see this? High breakout, pullback, again this high. Market goes up, again triggers the stop loss. So here, see this hammer. The first breakout pattern took place, but here, after that. Arpit sir, it is a price and a time combination. So when the price sustains above your high price for a certain period, that you have to decide. It can be 15 minutes, 30 minutes, 1 hour, 2 hours. That is your call. You have to decide as an individual. What is the price sustenance above the breakout level? Right? That is, you have to decide. Is this now clear, Anand sir? Good. So what is a bullish engulfing? It is a bullish reversal pattern. So bullish reversal happens at the low when the market is falling. Day one bearish, right? Okay. Day two, market opens down. From there is a sharp reversal, and market covers the day one bearishness. Okay. Market covers the day one bearishness. So basically on the second day, the bulls have come back after a negative opening. There is a surprise element and they take up the market. And the day two real body covers the day one real body. That is why it is called a bullish engulfing pattern. That is why it is called a bullish engulfing pattern. Yeah, Vikesh sir, retest means उसको वापस टच करने जा रहा है. जो ब्रेकआउट लेवल है उसको टच करने जा रहा है. It is retesting, but it is trying to touch that previous breakout level. That is called the meaning of the word retest. Right? So here what are you saying? Bullish engulfing, day 1 bearish. Day 2, price market opens down. From there is a sharp reversal and price goes up and closes near the high of the day, and it covers the day 1 real body. Are we clear with this? Are we clear? Good. Now the question comes in. Yeah, what is the challenge, Manjunath sir? What is the challenge? Crystal clear. Where are you stuck? कहाँ प्रॉब्लम है सर? आप देख रहे हो सर, मार्केट गिरा, दूसरा दिन मार्केट नीचे खुला, बाइंग आया, ऊपर बंद किया. The real body of day 2 covers the real body of day 1. Right? That's it. Lovely, Manju sir, you are a lovely person. Vineet Bhai is saying CMT. No sir, no Ramakrishna sir, technical language is the real body. And if it covers the wicks, it is wick all the more good. Right? But technical language is only the real body. Now the question comes here, Siddharth sir, if I combine the two, you know in candlesticks you can combine the two. So if I take the opening of day 1, I take the highest high of the last 2 days, lowest low of the last 2 days. What do I get? What do I get? Lovely Vikesh sir. This is the open, this is the close, this is the high, this is the low. So when I combine a bullish engulfing 2 days into one, what do I get? Hammer pattern at the low. Hammer pattern at the low. Right? Is it an inverse hammer or a normal hammer? This is a normal hammer. Normal hammer. Right? This is a normal hammer, sir. Okay? So if you are not worried about a normal hammer, sit with a normal hammer. You will understand it, sir. Now, you know how to trade the normal hammer. Anand sir, are you clear? How will you trade the normal hammer? Either the high breaks out or the breakout of the high, retest, reconfirmation. So Anand sir, Aman sir, do you understand the significance of retest and reconfirmation? In life, like in market, nothing moves in a straight line. In life or a market, if everybody thinks the market is going to go up from here, then there will be no seller here. Everybody would want to be a buyer. There will be no seller. Everybody would want to be a buyer. So a lot of times when too many people buy here, market reverses. When market reverses, these people who have bought in here exit. So you have heard this word, weak hands are shaken off. Weak hands, once they are shaken off, again the buyer comes and pulls up the market. So that is why this principle of breakout, retest, reconfirmation. Are you clear with the psychology? अगर सबको पता है कि मार्केट बढ़ना है, then there will be no seller. Ramakrishna sir, everyone will be a buyer. Right? Which cannot be the case in the market. Anand sir, the testing is always at the top. Here at the recent high. Anand sir, it looks like you are new to technicals. So do some recording, do some homework, study some few charts. Right? Technical analysis is an art as well as a science. There is no precise point for entry. There is no precise point for exit. Now see this. That is why I say, just see this. Lovely chart. Can you see this? Engulfing. Gap down. Covers the whole body. Now just see this. The next day there is a breakout. Again that goes in. Now see this. This is breakout, retest, reconfirmation. So when this high, Anand sir, when this high gets breached, I have bought. So this was a breakout, retest, reconfirmation. So that is why I say in life and in markets, now Ankit sir, a lot of times it might be that the market might straight give a breakout and go up. In that scenario, I will miss the trade. So in life, please remember, for every choice, that is why I showed you the video beforehand, every choice that you make, there are consequences. So any strategy which you take, nothing is perfect. Nothing is perfect. Absolutely clear. Always remember, exit whenever your stop loss is triggered. That is your power of your discipline. Is my voice clear? Anybody, everyone hearing perfectly fine? Good. So someone who is not hearing clearly, please log back. Can you see this hammer pattern? Can you see again this hammer was made here? So always remember, when the markets are reversing, it does not reverse immediately. It takes time. Anand sir, the trend change takes time. So once you see this now with your open eyes, you will be able to see that markets consist of many simple patterns. And when you add a lot of simple patterns together, that is where you get the secret of success. That is where you get the secret of success. Am I clear with engulfing? Welcome to candlesticks. I don't know whether the candlesticks are reliable or not. But what I can tell you, if you have your eyes open and your ears open and you can hear what the market wants to tell you, you will make money. If you hear what the market wants to tell you, you will make money. Now you come down to a shooting star. A shooting star. What is it? Bearish reversal. Markets are going up. Market opens, gap up, goes up, comes down, closes near to the open. Small real body Little or no upper shadow. Sharp selling from the highs. Sharp selling from the highs. Right? So this is a bearish reversal. When the markets are going up and you see someone has sold sharply, what do you see? Sharp reversal. Now again, the same principle like the hammer. If you are to trade the shooting star, either the low is breached, breakdown of the lows, either the low is breached, or what is it? Breakdown, pullback, further breakdown. So breakdown, pullback, reconfirmation. Same principle. 1, 2, 3. Like the hammer. So if my friends, the reversal patterns are going to be the same. The reversal patterns are going to be the same. When the market is in the high, the low needs to be breached. When the markets are at the lows and you get a hammer, the high needs to be breached. How many of you have seen a shooting star? How many? Okay, so how do you define a trend? Subramaniam sir, how do you define a trend? Any ways can you define a trend? So I will show you the way I define a trend. So I go down to Bollinger Band. How many of you seen this indicator called Bollinger Band? Anyone? I use the parameters 50 and I use the parameters 0.7. So my principle is clear. If the market is in an uptrend, it will not trade below the upper Bollinger. If the market is in a downtrend, it will not trade above the lower Bollinger. And if it is in the range, it will trade between the upper and the lower Bollinger. So what are you seeing? And for the first time, we are seeing some sort of a breakout in Bank Nifty above the upper Bollinger. So here there was a breakout, but it did not sustain. I'm very confident that Bank Nifty now, until and unless if we don't see this low breakdown of 35,000, we are going to see 36,000 very soon. Very soon. The momentum is very sharp. So it's a strong range consolidation breakout. So whenever it is trading above the upper Bollinger, the trend is up. So what have you seen? Price retested the upper Bollinger. It did not go below. And now it is breaking out. This is a classical range formation. If you see in a bullish stock, the prices will come closer to the upper Bollinger and reverse from there. Reverse from there. This has happened in this Bank Nifty. Very strong chance of Bank Nifty giving you a good run. Till 35,000 is not breached. Am I clear? So always, Nitin sir, see the bigger time frame. See the bigger time frame. Listen to what I'm saying. Whenever you have a problem in confusion, go to the 10th floor. When you go down to the 10th floor, you will see things very clearly. What is happening on the ground floor? Then when you are in the first floor. Can you see this indicator? 50 length, 0.7 is the paradigm base. Right? Is this clear? Good. Avinash sir, I've heard a lot about you. I keep reading your post. Nice to hear you for the first time in my class. So let's enjoy this party. If tomorrow Bank Nifty goes above 35,500, the party is on. The party is on. Good. Amrish bhai, this is basically standard deviation. Nitin sir, I use it only for seeing the trend. For me, if the price is not going, sustaining below the upper Bollinger, that means the market is bullish. If the price does not go down below the upper Bollinger, this is my level, 35,000. Right? Markets are bullish. So you can say that tomorrow if you are seeing 35,500, 350 again, and markets are sustaining above this, you're going to see a breakout. OP sir, you can use your paradigm. For me, 0.7. John Bollinger said, when you're using a bigger time frame, you have to reduce the standard deviation. When you are using a smaller time frame, like 20 moving average, you have to increase the standard deviation. Right? So you can read his book, Bollinger on Bollinger Bands, to understand. Okay? Good. I'm not a technical teacher, but I'm trying my level best. So let us see. In Bank Nifty, where are we getting the shooting star? Can you see here? See here, but the low was not breached and sustained. Market went up. So let us see anywhere else. Can I get a shooting star? This here. Low was sustained and breached. Can you see next day went up? Right? Just see this. Gaurav sir, low breach, next day went up. And again gap up, it broke the low. Next 4 days it was down. So these patterns have a theoretical 3 to 4 days power. Right? Yeah, it is valid for 3 to 4 days. So generally the shooting star low is valid for 3 to 4 days. Now can you see in an uptrend what happens? When you get this reversal, shooting star, 3-4 days market comes down, again goes up. But if you get a shooting star in a downtrend, see here, the fall is much more sharper. The fall is much more sharper than in a downtrend. So can you see this? How it captures the trend? So this really captures the trend. If you see the Adani, a lot of people were talking about Adani. So let me show you Adani Green. Can you see? It never went below the upper Bollinger. Only when the correction happened, it came down. So this is the power of trend. So if you are using a trend following indicator, so Adani Green has already entered a trading range. I'm seeing the first time the chart. First time I'm seeing the chart. It has already entered a trading range. The story is over. After an uptrend, it's entered a trading range. So let us see. Is this clear now? Is the shooting star clear? Now we come down to bearish engulfing. What is bearish engulfing? Market is going up. Day 1 bullish. Day 2 gap up. Covers the day 1 real body. If it covers the whole body, very good. But it should cover at least the real body. Change in sentiments. Can you see the sentiments? Till yesterday it was bullish. Till yesterday it was bullish. From the high there is a reversal. From the high there is a reversal. Sharp fall. What does this indicate? The bulls here have been trapped. And if the market breaks the low, so can I make these candles together? Day 1 open, day 2 close, highest high, lowest low. What do I get at the top? What is it? What is it, my friends? I've taught you right now. Ramakrishna sir, the world is round. Can you see the same patterns are being repeated? So one more principle in my class. Till you have not experienced anything by yourself, do not believe what others are saying, what works and what does not work. In the markets, if you don't have experience and wisdom, nothing will work for you. And if you have wisdom and experience, you can make use of all the patterns. Is this clear? So when I combine the bearish engulfing, 2 candles into 1, I get nothing but a shooting star at the top. Breach of the low, retest, and it comes down. Breach of the low, retest, and it comes down. Am I making sure? Great. Good. Lovely. सुधांशु सर कहां से हो? Where are you from? So let me find you bullish and bearish engulfing. Can you see this? Day 1 bullish in an uptrend. Day 2 gap up, covers the whole real body. Breakdown. So can you see this? In this breakdown, there is no retest, straight fall. Lovely, Anand sir. If you combine both the candles of a shooting star, it becomes a. If you combine both the candles of bearish engulfing, it becomes a shooting star. Lovely. So here, when the low got breached, you have to sell. Can you tell me why? Who can tell me why I will sell here? You remember the first principle? Narrow cluster, Marubozu. Thank you, Ashutosh sir. So this is Ankit sir, combination of 2 patterns. Bearish engulfing along with the Marubozu range breakout. So you have to now start combining patterns together to understand the beauty of the market. Lovely, Akash sir. Lovely. Great. So let us do a live example of a bearish engulfing. Right? So let us take L&T. Or let us take a good one. Let us take IndusInd Bank. Nitin sir, you will get. Don't worry. Time लगेगा sir. एक दिन में नहीं होगा. Recording देखना होगा. Let us see today IndusInd Bank. Wow. Where is bearish engulfing? Can you show me? Can anybody show me? Bearish engulfing at the top. If anybody shows me, you get a chocolate. Quick. Lovely. It is not February 15th. It is January 21st. Can you see this? Day 1 bullish. Day 2 gap up. Covering the body. Can you see this is combining with range cluster? Can you see this? See, life is so small. Good. I'm happy with you guys. You guys are champions. We should not have kept a technical class. You guys know everything. Can you show me an example of a bullish engulfing? BK sir, bullish engulfing. Day 1 bullish, day 2, day 1 bearish, day 2 bullish. Yes. 1st August. No. No. June. No. Let's see. Can I say this? Can I say this? Can you all see the screen? Day 1 bearish, day 2 gap down, bullish, breakout, moves up slowly. Right? So Nitin sir said, how can we take trades? So Nitin sir, for me, all these levels above the upper Bollinger, I'm a buyer. I will not sell. All these levels below the lower Bollinger, I will not buy. I'm a seller. So when the market is in a trend, what I'm going to just see here, from 600 rupees, can you see? It went up to 1000 rupees. So if I know the direction, I have to just combine my candlestick pattern to buy. Can you see this breakout? It happened here. Narrow range cluster, Marubozu. So that is how I combine. I am a buyer above this Bollinger, upper Bollinger. I'm a seller below the Bollinger, and in the middle, I'm a range. So Chintans bhai, for an investor, you have to combine 2 time frames, weekly and daily. Right? Weekly and daily. So what am I seeing here? Can you see all the price action? What is it telling you? What is it? What is IndusInd Bank telling you? Above 1022, you can get a Marubozu. Is it telling you this, Subir sir? Above 1022, you can get a Marubozu. And Ankit sir, why do you think it will give a breakout? Can you tell me why this will give an upper breakout? Who can tell me why this will give an upside breakout? Always remember, 1 or 2 days before an opposite side breakout, can you see this breach? Can you see the market broke 3 days low? And it has closed up. Can you see this in the morning? Weak hands have been shaken out. Only for 5 minutes it triggered all the people's stop loss. Have you heard the word stop loss hunting? So now weak people are out, Sukhbir sir. So when weak people are out, what is going to happen? About 1030 breakout. Get ready for your ride. What will be your stop loss when you enter? No, Sukhbir sir, this is your level. Can you see this? 1008. Below 1008. So your risk is 30 rupees. What is your reward? The reward is very clear. This is my reward. Range high 1120. In 5 days, I'm expecting 100 rupees. My stop loss is 30. Good probability trade for making money. Why? Consolidation. If you see it as consolidation for a long time near the upper Bollinger, it is time that breakout needs to be done. Good. So are we clear with these patterns? Now there was someone who was asking me inverted hammer. Who was the one who was saying inverted hammer? So when you get this at the top, this is called shooting star. When the market is falling and you get this pattern at the bottom, it is called inverted hammer. This is a bullish reversal. Same name. If you see this same pattern at the bottom is called inverted hammer, and at the top it is called shooting star. So when it is formed at the bottom, you are expecting the markets to go up. When it is formed at the top, you are expecting the low to be breached and it to fall. So can you see the candlestick? Same pattern. If it is at the lows, the name changes from shooting star to inverted hammer. The world is very small, my friends. Very small. Am I making sense? Great. So how many of you were in the market in the year 2019? How many? Were you? Good, Subir sir. Nice. Nice. Anand sir, also you. Lovely. So let me take you to the 2019. You remember how many of you know Pulwama? Wow, Abhishek sir. Good. Yeah, Sukhbir bhai, where are you from? Lovely, sir. Nice place. Can you see this pattern here? Can everyone see this clearly? What is this? Inverted hammer. This was at the lowest level. If you see, the market did not make a lower low after this, Anand sir. Did not make a lower low. High was breached. Can you see this? It came back, retested the high. So my friends, before this, the market was in a trading range as we were coming near to the elections. So whenever the next time you remember 2024, right? Okay, it was trading in a narrow range. So when the market makes an inverted hammer, what is the logic? Let's come down to the psychology of this pattern. What happens? Chintan bhai, market is falling. It opens gap down, goes up. Again, there is a sharp sell-off near to the low, right? What is happening, Chintan bhai? Here the market does not go too much below the low of the day. It is staying near the open. Now, Chintan bhai, the market either respects the hammer high, inverted hammer high, and reverses from here. Now, the fact that the market did not fall the next day tells you that this buyer who had bought early is very strong. The buyer who had bought early is very strong. If the market would have been weak, Chintan bhai, market would have given a negative candle the next day. Did not happen, and you see market made a lower low but did not close below it. Till it does not give a closing below the inverted hammer, the psychology tells you there is a strong potential for reversal. Am I making sense? Chintan bhai, તમારા exam માં pass થઈ ગયો. Thank you. Did everyone understand which language did I speak? So I know 7 languages. So I will be taking one language at a time. Okay? 7, Abhishek sir. Good. Now we come down to tweezer top and tweezer bottoms. So tweezer top, what is it? Variation of engulfing. Market is going up. Day 1 bullish. Close near the day high. Day 2 same open. Covers up the bigger distance. So when I combine this, day 1 open, day 2 close, higher high. What do I get? What do I get? Tweezer top. What do I get, my friends? Anand sir. Shooting star. At the top. Now take this. Day 1 open. Day 2. What do you get? Hammer. Lovely. Lovely. So these are nothing, my friends, but the variation of bullish reversal. Tweezer bottom is nothing but the variation of bullish reversal. Tweezer top is nothing but the variation of bearish reversal. Hope we are making sense. Right? Good, Siddharth sir. Great. So you know now, and my understanding here is you guys are clear now how to trade the reversal patterns. This is my favorite. Can you see a big fall? Shallow pullback. Gap down. Again a retest. Reversal. These types of pattern help me to make money. Why? Because I love the fight between the buyers and the sellers. I want the buyers versus the sellers to fight in the market. I can see them gap down opening, going towards the high, again selling off. Power of the sellers. Just see the power of the sellers. Gap down opening, again retesting the high, and this. Is this clear? I don't recommend anything, sir. Please be clear. On technical front, I'm not recommending you anything. Nitin, sir, intraday trading, I don't recommend. I'm very clear with it. And in options, whatever I'm going to teach you in intraday is all very clear without technicals. So I use technicals for a bigger time frame. I don't use for intraday. Intraday, my knowledge tells me is price action. Like I showed you the IndusInd Bank chart. It broke the low only for one candle and reversed. IndusInd, good buy. If it sustains above the high, I've shown you all the banking stocks. They're all doing it. Yeah, you can use for swing, you can use for breakout also. We will discuss as time goes by. Do not worry. But I again put in a caveat, I'm not a technical teacher. Right? I'm a simple option teacher. So first of all, don't expect me to be a demigod or someone. I'm just a very small time trainer and a teacher. I will try my level best to answer all your questions. But please understand, in markets, there are no fixed rules. One rule in market is markets are dynamic, and you also have to be dynamic. So I keep telling my students, you have to be like the river. You have to flow with the direction of the river. Am I clear with it? Now let us go down to dark cloud cover. Another variation. Market is going up. Strong bullish candle. Next day, gap up. Market gives away 50% of day one gains. 50%. So when it is giving away 50% of the day one gains, what does that mean? That means bullishness of last day has been neutralized to the extent of 50%. It does not cover full 100%. Now, Ramakrishna sir, I have a different opinion. How many of you have seen that the market is going up the whole day intraday, and there is some news which comes in or some rumor that finance minister is going to put in a tax and the market falls down? How many of you have seen that? So a lot of times in the last 1 hour of trading, market corrects, not because of very strong news or rumors. Right? Just see this example. Market is in an uptrend, small correction, 50%. So if it is weak, it will trade below the day one, day two low. And if it is strong, markets will breach the 2 days high. So in this case, there was some weakness, but it got neutralized if the high was breached and sustained. So a lot of times I see this, because of small intraday volatility, it forms this sort of a pattern. This pattern is only valid if the low of the 2 days is breached. If the low of the 2 days is not breached, what do you see? The trend next day immediately reverses. The trend next day immediately reverses. Am I making sense? Is this clear? Good. So I'm teaching you the practical stuff. I don't know theory very well. All right. So these are my experiences I'm sharing with you. So in technical language, you will hear that whenever you get this dark cloud cover, market is supposed to go down. But in reality, I've seen a lot of times it does the opposite. And whenever if it breaches the high, the buying is very powerful. The buying is super sharp. That is why I told you, if IndusInd Bank breaches on Monday, the buying is going to be super sharp. Why? Because the weak hands are out in IndusInd Bank. Because the weak hands are out in IndusInd Bank. Can you see all the people who had the stop loss at 997, all of them are out. So now this is that level, 4-day high, 1020, 22. If it sustains above this, you're going to get a big rally. And this is in all banking stocks, my friends. All. I checked it up before the class. Everything in the same sector. Already a Marubozu, Axis Bank. Today your buy call is on. Can you see this? Cluster. Great. Lovely. Now we come down to someone who said doji here. Avinash sir, let us finish our technicals. Then we will study the chart. There is a lot of homework to be done for tomorrow. And then we will surely study all the banking stocks for you, sir. Not a problem. Doji pattern. What are dojis? Dojis are nothing but equality or indecision between the bulls and the bears. That means the open and close are so close to each other that we do not know who has won the day, the bulls or the bears, the buyers or the sellers. And there are two types of candlesticks. One is a normal candlesticks and one is a long-legged candlesticks where the upper shadow and the lower shadow are quite bigger than the average candles. Right? Is this making sense? Am I clear? Good. Now, how do you apply, Puneet sir? Now, there are different ways. When the market is in a downtrend, and when you get this dragonfly doji means open, high, and close are the same. There is a long lower shadow. Is it something like hammer? Is it something like hammer? So Abhinav sir, you know when to buy it. Breakout of the highs or breakout, retest, reconfirmation. Lovely. Breakout, retest, reconfirmation. Now you get another variation which is called the gravestone doji. Gravestone doji. Market goes up, comes down. Open, low, and close are the same. Open, low, and close are the same, and the market breaks down. Right? It comes down and it falls. Where have you seen this? Shooting star. Have you seen this? Thank you, Anand sir. I'm liking you, Anand sir. Lovely concentration you have. Are you an engineer or a chartered accountant? What are you, Anand sir? Thank you. Sir, as a teacher, I can catch people. Yes, Anand sir. Lovely. You are very sharp, Anand sir. Very sharp. Gravestone doji. Long upper shadow, no lower shadow. Open, low and close are near to each other. Right? Now, what is the implication or importance of doji? When the market is going up, it is in an uptrend. Whenever you get doji, it is called loss of momentum. So doji means open and close are near to each other. It means loss of momentum. So whenever there is a loss of momentum, what do? You know that the current trend is losing momentum. Market might form a trading range or might reverse from here. So if the low is breached, when you get 2-3 dojis near to each other, even after a day's gap, and if the low is breached, probably the current trend is getting over. How many of you know buy on rumors, sell on news? How many of you know this? How many of you are from Bangalore or Karnataka? Anyone? Champata, do you know that in Bangalore the elections were held, state election 2018 May? 2018 May. This was the day of the result. Buy on rumors, sell on news. This day the news came in. Long shadow doji. Day before doji, the low got breached. Gap down, went up, broke the low the next day. Broke the low the next day. Am I making sense? Is this clear? Good. So doji near the top or the bottom signifies loss of momentum. It might happen together or it might happen slowly. So always remember, near the top or the bottom, when you're finding small real bodies or you're seeing a loss of momentum, it tells you that the current trend is going to reverse. It tells you that the current trend after a rise or a fall is going to reverse. Right? Am I clear? Good, Subir sir. I like your confidence. Keep it up. When the doji appears in the range market, wait for the range breakout, Subramanian sir, like here. Can you see this dojis here? This is the range high. Wait for the range breakout. Good. Evening star. So now we're coming to 3 candle patterns. Importance here in the evening star is, see very carefully and tell me, who can tell me what is the importance here? If you can find what is the keywords which is going to tell you. So one thing is there, it is a bearish reversal, day 1 bullish, strong uptrend. Can you see this word gap up, Anupai? Can you see the word gap up? So day 2 there is a gap up, right? Day 3, what do you see? Gap down. Same area, can you see the gap? Sudhanshu sir, the day before there was a gap up and the day later there is a gap down. Can you see this? This is called an evening star. The sentiment has changed there, Gopi sir. The sentiment which was bullish has now turned bearish. Why? Because this gap is not fulfilled. The market opens, does not fill the gap, and it falls. This area remains unfilled. It's a gap area. That is the important part. So day 1 bullish, day 2 small bullish or bearish candle with a gap up opening, day 3 gap down and falls. The sentiment changer is a gap up in before day 2 and the gap down on day 3. Change in sentiment. This is an evening star. Very difficult example to find in real markets, but you can go down. Please check the examples of evening star. Right? Now let us just come back to morning star. Day 1 bearish, day 2 gap down, small bullish or bearish body. Day 3 gap up. Right? Day 3 gap up. The gap between day 2 and day 3 is the same area. Day 2 gap down, day 3 gap up. It remains unfilled. Sentiment changer. So these gaps tell you that the trend is changing. The gaps tell you that the trend is changing and you have to take this advantage if it trades above this day 1 high. Right? Now, is this clear? Morning star, evening star? Good. Now we are coming down to hanging man. Lovely Ramakrishna sir, salute you. You are spot on. If I combine the 3 days into each other, I will get a hammer. Lovely. Phenomenal, sir. Salute you, sir, today. Hanging man. Can you see this is like a hammer? But this is found at the top. This is formed at the top. Hammer is formed at the bottom. So this is a bearish reversal. Hammer at the bottom. Is this making sense? Is this clear? Same name. But when I get a hanging man, that means too many buyers are trying to hold the position. If the market breaks the low, the market is going to fall. In case the market breaks the low, the market is going to fall. Right? Now let us do a cheat sheet. So this is called a cheat sheet where all the patterns are mentioned. Doji, if you get at the top or the bottom, it is a sign of market indecision. It can reverse. Marubozu, continuation, a sign that the trend is changing or it is maintaining the momentum. So bullish Harami, we did not do this. When the market is falling day 1, if it is bearish, and day 2, the momentum is stopped, a small real body of opposite color. It tells you that the downside momentum is slowing down and the markets can possibly reverse. So this word Harami is a Japanese word for a pregnant lady. Am I making sense? Same bearish Harami, markets going up, small body, opposite color. Day 1 bullish, day 2 small body on the negative side. Price comes down. Hammer, we have done this. Hanging man, what does it suggest? That many people are long in the markets and they are trying to sell, which could reverse back. Right? Now the next one. Bullish engulfing we have done, bearish engulfing we have done, morning star we have done, evening star we have done. Now this is the most important part. 3 white soldiers. When you get 3 continuous sessions where there is powerful real body in one direction, 3 continuous sessions, powerful real body upside, that means the current trend is up. We must look for any small correction to buy. 3 black crows, 3 continuous sessions of selling, big powerful real body candles. The current trend is down. Markets can fall after a small pullback. Dark cloud cover, we have done the opposite of a dark cloud. Day 1 bearish, day 2 covering 50% of the day 1 losses is called the piercing line. Right? So are we clear with all these patterns? So these are like what hammers are. This is what inverted hammer is, dragonfly, spinning top. Right? So these are all the patterns. So these are some other variations. You can just go through it. Any question regarding candlesticks? None? Good. Price patterns. So congratulations. We have completed candlesticks, but candlestick itself is incomplete. My friends, no sir, Nitin sir, 3 consecutive candles in 3 days. Continuously, daily. So Nitin sir, you become a Rajnikant of my class. You have gone and come back 10 times like Rajnikant does in his movies. Right? So price patterns are formations which appear on commodity or stock charts, which have a certain degree of predictive value. Sudhanshu sir, you will answer that question yourself as we do ahead in the class. Even if you get a 50% probability right, as a trader, you will be superb. So Sudhanshu sir, your target should be first to be 45% correct. Right now, my understanding is we are all stage 1, 2 traders. We are only 35% correct. So we have to push it up to 45% with practice, with dedication. Right? Sudeep sir, that will come with experience. Learn the 3 conditions of a hammer. Strong, long lower shadows, small real body. The lower shadow should be twice than that of the real body, little or no upper shadow. In a correction. Okay. So price patterns are formations which appear on the commodity or the stock charts. Yeah, Ramakrishna sir. Commodity or a stock charts which has a certain degree. So I told you any pattern which is predictive in nature, and it has a value which I can gauge, which is called predictive value. Repetitive in nature and predictive value, I can use it for my chart studies. Now what are the types? They can be continuation pattern like a flag, pennant or a triangle, or they can be a reversal pattern like head and shoulders, invert head and shoulders, inverted head and shoulders, double top, double bottom formation. So what are continuation pattern and reversal pattern? So continuation patterns are when the trend is up, market takes a pause and again moves back in the original direction. They are called continuation pattern. Reversal pattern is when the market trend is up, trend changes in the opposite direction. So what are flags? So anybody read Thomas Bulwarky Encyclopedia of Chart Patterns? So the first thing what he mentions, that the most successful and the popular pattern is a flag. Flag is a pause in the trend where the price is confined in the small range between 2 parallel lines, giving it like a flag-like appearance, which is a short in duration, consisting of several bars. How many of you heard this flag pattern? Anyone? No one? Okay, just see this, Anand bhai. Sharp rise very quickly. Can you see Tata Steel going up by 100 rupees? Matter of 5 days. After that, can you see it corrects by 25 rupees? Small box-like structure. And in one day, that breakout takes place. In one day, that breakout takes place. So what is the essence of this pattern? Biju sir, what is the essence? Buyer has taken the price up by 100 rupees. Seller tries to sell, does not bring it down. 25 rupees, normal correction. From there is a new high. From there is a new high. Am I making sense? Is this clear? So what is happening? The seller is not able to bring down the price. When the seller is not able to bring down the price after 4 to 5 days, what happens? The price goes up. And there is an upside breakout. So which type of stocks are going to see this flag pattern formation and the pennant pattern formation? So pennants, what is the difference between flag? Flags are horizontal in nature. So they are horizontal. After a big rise, the correction is horizontal. What is pennant? Pennant is a consolidation. After a big rise, there is a small range formation. There is a compression. So when you take your index finger and your thumb and you bring them closer to each other, it is compression. A pennant consists of 7 to 10 bars. If you see, the beauty of flag and pennants are only 7 to 10 bars. When there is more than 10, 12 bars, what is it? It becomes, what does it becomes? Triangle. Thank you, Vikesh sir. It becomes a triangle. Right? It will become a triangle. So the same implication, strong rise, narrow consolidation, breakout. Right? So which stocks will you get this? Which stocks will you get this? Those stocks making 52-week highs. Those stocks making 52-week highs. Right? Sharp rise, small consolidation. Can you see this? HDFC Bank. Breakout. Those stocks making 52-week highs. Very good, Infosys. Let us see Infosys. Spot on. Can you see this? Wow, Infosys, what has it formed? What has it formed? What have I taught you? What is this? The last thing what I taught you. Hammer at the top is called hanging man. So we have to keep a tab. Thus, now Infosys, you have to be very careful. Infosys needs to close above 1580. If in the next few days, if you are seeing Infosys holding around these levels, Too many people are bullish in Infosys. You have to be careful, right? So let us check where is the flag pattern. Can you see this here? Sharp buying from 900 to 1000. Is this a flag pattern? Is this a flag pattern? What was the low? 912. What was the high? 1037. Is this a flag pattern? Absolutely not. The correction is too much. Always remember, Amrish sir, correction should not be more than 30%. The correction should not be more than 30%. Can you see this, Sumit sir? Now can you see it? This is a flag. Can you see this rise? 675 to 800, from 800 to 770. This is a flag pattern, my friends. Am I now making sense? The correction after the rise should not be more than 25% to 30% of the total rise. Hope this is making sense to all of you all. Now, Thomas Bulwark said in his book, flag pattern has a success rate of 70%. Simple reason, the power of the buyer and the power of the seller. So the flag has a pattern. Anything which rises by 100 rupees and does not fall by 25 rupees is going to rise. Anything which falls by 100 rupees, does not rise by 25 rupees, is going to fall. That is the power of simple maths. The weak hands are here. These are the weak hands. This is the strong hand. Is this clear? I hope I'm making sense. So you guys are already champions. So I don't need to take it forward from here. Right? Now, the next one, triangle. What are triangles? OP sir, can you tell me what are triangles? They are horizontal trading patterns. The widest point is the start. As the market continues to trade in that range, the point of triangle is formed. So just let's see what are the types of triangles. Descending triangle. So what is a descending triangle? So always remember, when I connect the lows of the support area, they are called the demand line. And when I connect the highs, they're called the trend line or the supply line. So this is the supply trend line. This is the demand trend line. Right? Now what is happening here, Sumit sir? Market is falling. The buyer pulls it up, but he cannot take the price to the previous top. Again, the seller brings down to the same price. Again, the buyer takes up. Now see very carefully. Again, the seller pulls it down. Buyer takes it up. Now what happens? It does not touch this point. Now what happens? Slowly, 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 it starts trading around this level and then it breaches down. So when the buyer is unable to take to the supply trend line, that is the first sign. And now when the seller is very comfortable at this point, this is this breakdown which happens. So you are understanding the psychology here? Absolutely correct. So I will take you to all the three triangles and then I will take you to the example. Now let's understand this ascending triangle. See the chart pattern very clearly. because I'm going to take you to the Bank Nifty chart now. See this sharp buying. Again, the market falls, but can you see the correction? The previous bottom is not breached. The buyer is ready to buy again at a higher level. Again, the market does not fall. Again, the same level. And again, the market trades near the breakout level and breaks out. Breaks out. So can you see these 2 points? So this is called the demand trend line, where the buyers are active. This is called the supply trend line. A trend line is when I connect 2 points. It is called a trend line. Try to understand the psychology. The pattern is not important, my friends. The fight between the buyers and the seller is more important. As a market player, you need to understand this fight. My confidence in IndusInd Bank comes today from the weak hands coming out. Right? The longer the market stays around this breakout level, the more trouble the seller is, and the market is going to go up. The longer it stays here, there is more trouble. Am I making sense? Now we come down to symmetrical triangle. A symmetrical triangle, what do you see? Market is consolidating. Lower highs, higher lows. So the range is being crushed, compressed. So we wait for the range to break out either place. And then there is a consolidation. And then the breakout takes place. We need the range to be crushed first, and then the breakout of the range, and when it sustains above the range, that is where you need to play the breakout. So these are your 3 triangles, right? So let us see the price action. So let us check, where can we find the triangles? Let us check. Let me know, where are you finding the triangles? Let me know. So triangle is compression. So where do I find compression here? Where do I find compression here? So which triangle is this? This is a symmetrical triangle. So it breaks out on the upside. In the next 5 days, where do you see? Right? Now see this. What do you get? Descending triangle. Good. Now, before I take you here, now let us go to another pattern, which is called the reversal pattern. When the price is moving or changing direction, there is a shift between buyers and the sellers. And when the price breaks out of a particular area, it is the original trend is changing. So it is called a reversal pattern. Number one reversal pattern is head and shoulder pattern. So if you look at this chart and you look yourself into the mirror, this is your head, this is your left shoulder, this is your right shoulder. Now see this pattern carefully. Market goes up, corrects. Higher top, higher bottom. All the bulls are in full control. Now you see this. Same bottom. Higher top, same bottom. Now you get a lower top. Can you see this? Ideally, the right shoulder should be somewhere around to your left shoulder, up or down, lower than your head. This is called neckline. When I connect the 2 points together, this is called the neckline. And there the breakdown happens. Left shoulder, head, right shoulder. This is called a head and shoulder pattern. It's a very powerful pattern. Why? Can you see the change in trend from the buyer to the seller? The change in trend. It's a reversal pattern which is captured here. So my friends, can you see the last stage of a head and shoulder pattern? What is it? What is the last stage of a head and shoulder pattern? What is it? Who can tell me? Lovely. So let us check this. Vikesh sir. So can you see this? So can you see this trend change? So this is exactly not a head and shoulder pattern, but you can feel it because the neckline is declining. It is actually a channel, but can you see this? This level. You can clearly see that the sellers were more active and the buyers are defending the same range, and then the breakdown takes place. Then the breakdown takes place. Am I making sense? So when you are seeing a head and shoulder pattern, it is like this. Now Ramakrishna sir, inverse head and shoulder is like this. This is the left shoulder. This is the head. This is the right shoulder. Left shoulder, head, right shoulder. Am I making sense? Gaurav sir, if I take you to the hourly chart of Bank Nifty, Gaurav sir, if I take you to the hourly chart of Bank Nifty, can I say this? See this carefully, Gaurav sir. What is it? Left shoulder, head, right shoulder. Lovely Ramakrishna sir, you don't know me. You don't need me. You are yourself a champion. This is the neckline. If it sustains above this level, what are you going to see? Now can you see, a lot of people were asking me, can you see these two hammers? Can you see this reversal from here? So someone was asking me, sir, what is a retest? This is a retest. Second time it came here and second time there was a buying. That is called a retest. So can you see it broke out second time when it went up above this level? Trend was clear. Trend was clear. Yeah, Gaurav sir, you can ask me your questions. So this is inverted head and shoulder. Right? Now, we have two more patterns remaining. Double top. I'm going to come to that. You've taken my question, U-shaped and V-shaped. Double top. Top one. Market comes down, corrects. The top two is near. It can either be higher than top one or a little lower than the top one. And the market breaks the neckline. Right? Market breaks or breaches the neckline. So the general thing is, if this is the distance of 10 points below the neckline, there is a target of 10 points. Below the neckline, there is a target of 10 points which can be achieved. So double top formation, these are very rare. These are very common, sorry. Now you have double bottom, so double top is called M. Neckline breached, sell. Double bottom, W. Two bottoms which are close to each other, W. Can you show me in Bank Nifty? I just saw a double bottom. Who can show me? I just saw one. Can you see this? Can you see this? See how you combine candlestick. This is one bottom. The second bottom hammer pattern near to the same low. Market goes up, retest. Can you see this W? Beautiful. Can you see the permutation? Right? Now, there is a double top. Can you see this? One top, second top, neckline breached. Lovely. Great. M and W. Great. So friends, I hope you're liking me. I'm not boring you. Right, Jatin sir, what are you going to have for dinner? Now my favorite pattern. How many of you drink a cup of tea? This is the cup. Now there is something called a cup and a handle pattern, Ramakrishna sir. When the market falls drastically and rises drastically, at the same point from where the sell-off took place, and then there is a small consolidation, not giving up more than 20-25% of the gains, and then the breakout takes place. This is called a cup and a handle pattern. So let me take you to Reliance Industries. This is the most beautiful pattern I've seen. When the whole world was bearish, the whole world was bearish. Just see this. Sharp fall, sharp rise, consolidation, breakout retest. Absolutely, Abhishek sir, Coal India also. Lot of stocks you will find. No, what is the difference between a head and shoulder and a cup and handle? Head and shoulder is like this. One bottom fall and cup and handle is no left shoulder. Lovely Champadda. Sharp rise, sharp fall. Absolutely great. Lovely. Am I making sense? So let us do the cheat sheet. So everything should have a cheat sheet. Why? Because we need to pass the exams. See this flag, strong buying, consolidation, breakout. Symmetrical triangle, buying, small compression, breakout. Pennant, small range after a big rise. Sorry, this is a pennant, small range after a big rise. Cup and handle, sharp fall, same point, small consolidation, breakout. Ascending triangle, we have discussed this. Scallop is something like you've had an ice cream scoop. When you take out the ice cream scoop, when you go there, that is called the scallop. It is falling and then a consolidation goes up. Right? You have double bottom, you have triple top, head and shoulder, descending triangle. So believe me, my friends, now you have to use candlesticks along with the price action. Right? You have to use candlesticks along with the price action to do your stuffs. So my friends, you don't forget today. If you don't forget today, so there should be some homework, right? So that you can do your chart revision. How many of you are already in the WhatsApp group? All of you? Good. So just open your WhatsApp group. Did you find anything? That's your homework for today. Your deadline is tomorrow morning 9 o'clock. Find the bullish Marubozu on a daily chart in Tata Motors. Please do not send me PDF files. Please post it. Use this investing.com. Those people who have not yet registered in the WhatsApp, please connect with Agnish. There is someone by the name of Mr. Agnish who's your support team head. He will help you. Right? He will help you. So find a bullish Marubozu daily chart in Tata Motors. Narrow cluster. Find a bearish Marubozu daily chart, Maruti. Do not worry, those people who have not been added, you will be added. Find a cup and handle pattern in Reliance Industries daily chart. So let us write down the homework for all of you all. So people are worried. And I don't want to. That sir, do not worry. Let us write it down. Sir, anything for you, sir. Anything for you, Dak sir. Anything for my students. So how was the session today, Dak sir? You enjoyed it? Good. So what are you going to have for dinner, sir? Pramod sir, what are you going to have dinner? Dal Khichdi, Anup bhai, lovely. Yes, I like your attitude, Daksh bhai. जो भी ऊपर वाला देगा वही खाना है. We can't be complaining. There are a lot of people who go hungry. Lovely Gaurav sir. Gaurav bhai, कहाँ से हो आप? Are you from Delhi? Chole Bhature, you make me realize Sadar Bazaar, Chandni Chowk. Oh, you are Punjabi from Gurgaon. Are wah. Good, good. Okay, so just copying out. You can just take a photograph. Lovely sir, मथुरा के पेंडे तो फेमस है सर. मेरा ननियाल भी कानपुर में है सर. Yeah, Maharashtra is a problem for COVID. Please click a photograph. Please click a photograph, all those who are not there. Is this clear? Everyone click photograph. Just save it. Bhavin bhai, in the WhatsApp group, send these charts. Thank you. Everybody. Right. Thank you, friends, for your support of staying for so long. You are, my friends, as your deep driving desire is. You are as your deep driving desire is. As your desire is, so is your will. As your desire is, so is your will. As your will is, so is your deed. As your will is, so is your deed. As your deed is, so is your destiny. As your deed is, so is your destiny. So, my friends, if you desire today, tomorrow you're going to be a champion. A champion for me is not the one who stands first. A champion for me is who stands as the best version of himself, who stands to work to improve every day in life. On that note, thank you all for your support, for your spending time for these 3 hours. Thank you to your family from my side. Why? Because they have sacrificed this time. See you tomorrow with a fresh mind, with the energy and zeal that nothing is impossible. We are here to be learners. My friend, there is nothing called being a champion in the market. The market is the sole champion. So always be a student of this market. And with humility, accept what the market teaches you the lessons. On that note, bye-bye. See you tomorrow, where we are going to start with the homework and revision and then go to what is futures. Bye-bye. See you. Take care.